All right, ladies and gentlemen, hello and welcome back once again to the only nationally syndicated radio show all about the information economy. It's time for Inside Analysis. Yours truly, Eric Kavanaugh, is here, and we're going to talk about pretty hot topic. And in fact, there was some news that just broke today, which I sent to our guest and said, "Oh, I think this is the kind of thing you talk about." And he said, "Why, yes, it is. That's exactly what we're talking about." We're going to be talking with Ahikam Kaufman. He is the CEO of SafeBooks AI, and they provide transparency into financial matters, think accounting. And just today, as I was preparing to do this show, I came across an article that said Macy's delays earnings release as it says employee hid up to $154 million in delivery expenses. So this is throwing off their earnings report, throwing off their guidance. Not a very good look for our friends at Macy's. And $154 million. Wow, that's a lot of money. So let's bring in Ahikam Kaufman. Tell us a bit about yourself, Safe Books, and how you would have helped prevent something like this from happening.
Hi, good afternoon, and thank you for having me, Eric. So my background is in corporate finance. I spent 15 years in corporate finance before becoming an entrepreneur. And after being involved with a few companies, I thought about a problem in my kind of own original neck of the woods, which is corporate finance. And one of the big challenges you have today in companies is um, eh, corporate the financial data is scattered across many systems,
Hmm.
and part of the unknown work of the corporate finance team in the enterprise, is to validate and substantiate the financial data. It's called internal controls. Internal controls are actually a core piece of the work of
Hmm.
the office of the CFO.
Hmm.
It's a very tedious work, very difficult work, especially when the data is scattered across many systems. I'd like to think that the average office of the CFO today has between 10 to 20 systems they work with, where all the financial data is being processed at. And it's almost impossible to do it manually. Our system, basically what it helps to do is take your controls today and other controls that we have out of the box, and basically monitors the financial data end to end to confirm its accuracy, to confirm its completeness and its integrity, and it does that in real time. So being able to monitor financial data end to end and identify anomalies, such as the anomalies that Macy's reported actually today, would be something that we'll be able to do. I think what happened in Macy's, and I'm not an expert in Macy's, but I think what you see there is the ability of a single person in the corporate finance team to be able to conceal such an understatement of the financial records, and being able to do it single-handedly. Not only that, but when you're relying only on people and not on automation, you can't have the right flagging to be able to check an anomaly like that, because the same guy who's responsible to report it is the same guy who actually checks it.
Right. Yeah,
I'd
that's
like to
right.
think, correct, one core one core principle in the office of the CFO, I'm sorry, one core principle in the office of the CFO is segregation of duties. And typically, segregation of duties exists when you handle money in payments,
Hmm.
in disbursements, in payroll, but it's not emphasized much when you handle their financial records. I'd like to think that going forward, also with our technology, the ability to rely on automation, to delegate to automation to secure and check your data would increase the integrity and the reliability of the data, because
Hmm.
machines cannot lie and they will not conceal the way it was done today. So I'd like to think what happened in Macy's was a result of manual controls performed by the same person who was responsible to report on them.
Yeah. What's funny, you just used one of my mantras. I've been saying this for years. Machines don't lie. right? That's why we like them.
Amazing.
Because they just report what information they have. Now, it's not that they're always correct in what they report, but that's either because the data that went in was wrong or because there was a poor calculation somewhere. There was some transition. You move data around a lot. Sometimes it gets lost. I mean, we have a whole space in the IT world called observability these days, and it's all about knowing which data is coming through. Is it coming through properly? You have all these early warning signs. And, to your point about anomaly detection, I've noticed that the big banks like Capital One, for example, are starting to watch for things because you'll get a little notice on your phone that says, "Oh, you had two identical transactions. Did you make these purchases?" That's an anomaly detector, right?
Right there. It's interesting because I actually came from the a personal finance world and the payment world. I sold the company to Intuit a decade ago,
Wow.
and you're absolutely true, and it's super important. Intuit has Credit Karma today and Mint, which helps to monitor your finances. In the corporate world, many of those controls are established. So the anomalies are meaning you have processes which are documented to identify anomalies and issues. The challenge is and the problem is that there's no automation available to actually execute that. So a
Hmm.
lot of that work is kind of executed by either the internal finance team or it's outsourced to the big four or other consulting firms. And
Hmm.
the challenge with that, with every human being trying to monitor data end to end, with the complexity of the systems and the volume of the transaction, is that he can't do it in real time,
Right.
and he can't do it across all the data. So if you think about essentially what we're doing is very similar to in the concept of like what the cyber platform are doing to cyber exposures, where we monitor things end to end. We we actually identify vulnerabilities and we report them at scale, allowing not a single resource but multiple resources to have visibility into those vulnerabilities and exposure and being able to identify them and remediate them. And it's all happening in real time across 100% of the data. So
Hmm.
if you, in the finance world, and again, it's concepts that have been in finance for many years, there is a concept that was nurtured hundreds of years ago of sample auditing, which is um, where you basically rely on sampling to check data. And you say, okay, let me focus on 5%, and I assume that 95% will follow.
Hmm.
Today, with technology, you don't need to sample. You can check all the data. So the same way Capital One allows, uh, can help you by surveying and monitoring your own personal data like millions of other consumers or other bank customers, we can today check the enterprise data end to end across systems to validate its accuracy and integrity.
Hmm.
And and that's like what's missing today, because what finance teams are used to do, they're used to use BI, download dumps of data, tons of data into spreadsheets and trying to reconcile it or check it, where it's humanly impossible.
Right. That's right. Well, and this is, I think it's a very, very interesting time we're facing right now. And we've heard stories about, oh, how in the future you'll be able to do your taxes automatically. And I think that's true. I mean, I think the tax code right now, this is a bit afield of our topic, but the tax code is very, very complex. And that is a big part of the challenge right now. But if you just think about the accounting side, for example, in QuickBooks, right? Intuit owns QuickBooks. I've noticed that you're able to, when you start typing a name in, it'll say, "Oh, is it this company? Is it that company?" And it always has their information in there. So it's that kind of automation and checking that is going to be very valuable in doing accounting. So you enter your expenses. Well, if it's a restaurant, I'm pretty sure that's an expense of going out and eating somewhere. So I know where that should go on my tax form, basically. Same thing internally. And What I'm really curious to know is which systems you tap into. So are you actually tapping into the banking system by API, their accounting system, the ERP? Like what's the suite of technologies that you tap into to pull your signal that you use to do what you do?
That's a great question. I'll start with, the problem that Intuit is successfully solving in the SMBs are obviously way different. They're trying to help small business owners just execute their business or manage their business better. In the enterprise world, it's very different. You have
Mm.
a lot of systems that participates in every single business transaction,
Right.
and
That's
that's
right.
what makes it complex. And you
Right.
also have compliance. So to address your question, so think about, so the way we kind of think about the business, we think about it by business processes. Think about a business process called order to cash. Order
Hmm.
to cash is where the enterprise record all the activities from where you quote to a customer, prospect to a customer, you close the opportunity successfully, and then you start to build the customer, collect from the customer, and book the records in your financial system, in your ERP. So in that example, think about uh, the same transaction being captured in your CRM, in your
Hmm.
billing system,
Hmm.
in your payment gateway. Sometimes you have a legacy systems that kind of, if it's a tech company, it has its own business system inside as part of its legacy platform. And then you have your ERP. So you have like, and sometimes you would have multiple payment gateways because you're trying to manage your cost, processing cost. Maybe you have like a different payment gateway for Europe and for the US. So think about in order to cash process, which involves five, we've even seen 10 separate systems that captures and process that data. And now you need to sit in finance and not only make sure that the data is correct, you need to substantiate that. You need to be able to evidence that to your auditors or for compliance purposes, and good luck with that. So that
Hmm.
would be an example. Different system would participate in a process like a procure to pay, where
Hmm.
you document your procurement activities and your approvals, and then you go ahead and issue an order to a third party, to a vendor, and then you pay to that third party, and so on and so forth. Another process is hire to retire, where you capture your payroll, and your payroll and HRIS information, HR information systems could be different from, again, US, Europe, international. So you have dozens of systems that participate in every single process like that. And it's really complex to manage the data at the granular level. Now, I always say that the finance world, the corporate finance world, is different in two or three major aspects. The first aspect, that's your business data. It's not just like, when you think about cyber and when you think about IT, DevOps, all that data is important, but your finance data, the integrity and completeness of your finance data, it's how you manage your business, right? So that data has to be accurate. It
Right.
has to be accurate for currency, for location, for which expense item. You talked about expense categorization before that. So that's one aspect. The other aspect is compliance. Your financial data is many times regulated, whether you're a public company or
Right.
you own by certain shareholders, you have a debt from a bank, it's always regulated. So the ability or the need to maintain the integrity of your financial data is not just because it's the right thing to do, but you're
Right.
actually right because you need to maintain compliance. The third reason, the third pillar composing the importance of financial data is because financial data is money. So
Hmm.
it's not just if your financial data is wrong, it's not like another world or another system where you fix the data so you get better visibility or whatever. You can leave money on the table, whether you're not collecting, you're not billing your customers on time, you're not collecting on time, or you're double paying your I think between fraud and double payments, the assumption is that every large company probably overspend like at least 1% of its spend. So leaving money on the table is also a ramification of mismanaging your financial data. And
Hmm.
again, today, most of that data, most of these controls are executed manually.
Hmm.
And that's the challenge.
Just as some background, one of my clients years ago was a company that did hierarchy management first for financial services, and what I learned from one of these guys is that exception handling takes most of your time. So most of the accounts, when they close the books at the end of the month, most of the accounts are just fine. There's no trouble. But when there is trouble, oh my goodness, there's real trouble because you have to, as you suggest, go line by line. You're comparing this, comparing that stuff that a human being can do very slowly and fairly poorly, I must say. Whereas machines, especially machine learning algorithms, can be extremely efficient at just checking things. Is this correct? Is that correct? Is this correct? Is that correct? All day long. You can just go back and forth, back and forth. And that's why you want to be able to use artificial intelligence, machine learning, these kinds of capacities, along with automation, of course, to find the anomalies. And that's really what you're doing, right? Is you're searching for anomalies and then you're explaining to the user why the system thinks that's an anomaly. Got about 1 minute before this segment is over. So real quick, you're doing anomaly detection, but it's explainable. Is that right?
It's explainable. It's actually some of the explainability is provided by AI because we create for every company a dedicated model that
Hmm.
learn its cost structure and then
Wow.
able to explain the variations, the discrepancies, the fluctuations from your transactional data. So your ability not only to see the anomalies or the fluctuations, but actually to get the explainability that can or cannot resonate with you, but you're the expert on your data. So it's very easy for you to be able, instead of focusing on fetching the data or analyzing it, just to deal, as you mentioned before, just to deal with the anomalies, just focus on the remediation process instead of the fetching and the analysis of tons of data, which is humanly impossible.
That is very interesting. We're going to pick this up after the break, folks, but we're talking to Ahikam Kaufman. He is the founder of SafeBooks AI. They are a financial transparency software company, so they're helping you stay on top of the money, where the money is going, if it's going to the right places, and if weird things happen, and that's when you want to roll up your sleeves and take a look and say, "Uh-oh, why is there $143 million now in the expenses that wasn't there a day ago?" That's a problem. We'll be right back. You're listening to Inside Analysis. All right, folks, back here on Inside Analysis, already a fascinating show. We're talking to Ahikam Kaufman. He is the founder of SafeBooks AI. They are a company that provides software to track your finances and track your books and make sure that things are going well. And Ahikam, I have to say, I was very impressed and intrigued when you told me that you build a mini model for each company. So I'll throw one of my theories at you, and I realize these are much smaller models than we're talking about ChatGPT. Those are
Correct.
large language models, right? And there are also small language models, and there are also lots and lots of other models. I mean, there's no end to the different ways that you can build an AI model. And training it is fascinating stuff. We've been talking to a number of companies doing that work these days. There's a lot of work that goes into it, but I'm really intrigued that you, for every client, will build out a model, a sort of mini model that you will train on their historical data. And you told me in the break there that you assume the historical data is correct. So this is very interesting because by giving each company their own model, you are representing the uniqueness of every company. Because even in the same industry, even if you're fast food chains, there are going to be a lot of unique things about your organization, whether it be how you hire people, how you come up with your pricing models. I mean, there's all kinds of stuff that comes into it. And what I've learned about the enterprise, to your point earlier, is that it is always bespoke. There is no one enterprise that is exactly like some other enterprise, or even really all that close, because again of the DNA of how you got here, the history of the company, all the systems that you use. So I think that's very compelling that you are building a model for each one of your clients and you train it on their historical data. What kind of historical data do you typically train it on? And if you can go into that a little bit.
Oh, Eric, you're making my role here very easy because it's almost like as if you were working for SafeBooks. So indeed,
I get it.
we're making a model for every company because every company is unique in the way it's doing business, the system it's using, and its data structures.
Hmm.
So we first of all, companies don't allow it. And that's actually one of the things that constrains CFOs today. Because, for example, think about even if OpenAI had the analysis capability to give you answers on, let's say, variance analysis or fluctuations, you're not allowed to take corporate data and put it in OpenAI. You can't do
Right.
that.
Right.
So, but again, as you said, every company is unique. Their data structure is unique. So we have to build a model for every company. And basically, when we take all the data from their CRM, from their ERP, from their billing system, from their payment gateway, that data set, that structure, the way they customize the system is unique. And therefore, it wouldn't help even if we use other companies' models to be able to check or validate your data. So that's what we do. So the good thing about enterprise financial system is that we have the historical data, so we can always look back 2, 3 years back and just train the model based on that. And we actually have a unique way to validate that the model actually learns it correctly. And then we kind of have all kind of rules on top to make sure it gives you only the 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 insights which are important to you, trying to avoid false positive as much as possible.
Right.
So that's also important because otherwise finance team can argue that, with all the goodness comes a lot of redundancy or redundant work, that now all kind of things they have to look at, which doesn't give them any value. So we have a
Mhm.
combination of AI and non-AI technology that allows us to kind of laser focus on things that matters, and basically gives you all the insights you need to be able to validate, substantiate, and remediate your financial data.
Mhm.
And
Yeah,
what's more
that's
important, if
go
I
ahead.
can add, Eric, if
Yeah.
that's okay, again, um, think about, I'm sure you're familiar with Sarbanes-Oxley. What's
Mhm.
really important is the fact that when you are regulated for whatever reason, whether it's Sarbanes-Oxley or you have a debt from a bank or you just have a syndicate of investors that requires that regulation, the you need to validate and substantiate your data through internal controls,
Mhm.
even if all your data is perfect. So think about the office of the CFO needing to execute tons of manual work to validate and substantiate the data, even if the data is okay. So
Mhm.
what I'm trying to say is, even if your data is perfect, you still need to do that work. Even if
Mhm.
your systems are perfect, everything is perfect, you need to be able to show, to demonstrate that you've checked your data. And that's where our value is. Yes, of course, we can identify mistakes or issues, but even if we don't do that, we are still making the process way more efficient than by executing it with analysts or accountants. And one of the things I wanted to mention, I don't know if we want to touch it now or later. We're seeing a significant accountant shortage, which
Mm.
is unique. It's like, you remember the story about the bees disappearing 15
Yeah.
years ago, and
Right.
the bee population, the global bee population decreasing by like a significant amount. We are watching and seeing a, a significant decrease in accountants. And I think in 2022, it was the year where the lowest year in the last 70 or 80 years where people signed up for a CPA license. We don't know what the reason is, but the
Mm.
work is difficult, the work is tedious, and people, I'd like to think that even especially in the post-COVID environment, Generation X, Generation Y, Generation Z, they're trying to get away from that tedious data analysis paralysis works that we are actually automating.
Yeah, I mean, you bring up a lot of good points there, and I spent a whole past life in the risk world. I did a bunch of work with a group called the Global Association of Risk Professionals, and I remember in that world, control points are very, very important. A control point is any point at which a person or machine can take a decision, either yes or no, or question something, look into something more. And that's kind of what you're alluding to, right? Is you want control points baked into your processes. And some of that is in the ERP, some of that is in the accounting system, some of that is manual that people have to pay attention to, but you want as little manual as possible, right? I mean, that's the vision, is to automate as much as possible, allow for corrections. So, like when I enter in some record into my ledger, if it looks really weird, you want a little alert right then. Are you sure about this? Is that the kind of thing that you also do through your software, or that you recommend for your clients?
Yes. Um, uh, I'm sure from your historical knowledge, when we look at companies, the size of a finance organization is roughly, I'd like to think roughly, let's say in technology companies, okay?
Hmm.
It's where they don't have inventory. They don't, for the most part. I'm not talking about Amazon. Talk about software technology companies.
Sure.
The size of the finance organization is roughly between 3 to 5% of headcount.
Right.
I'd like to think that the finance leadership don't even know the folks who are doing the work at the, as I call it, at the engine room,
Hmm.
3 stories below,
Right.
validating and crunching all the data.
Right.
But those people, like, I'd like to think, saying cautiously, like in the Macy's case, those are the people who are doing one of the most important work of, again, validating and substantiating the data. Everyone likes to, be in the cockpit, talking about financial strategy, about funding, about financial planning and analysis. But at the end of the day, it's the what's really important is the sheer data, but that's really being handled and managed by people which are not high in the food chain, and every single mistake could be horrifying, like we've seen today in Macy's.
Hmm.
And I'd like to think that your attention and your visibility into those people who kind of maybe I'm missing the term, but they're sitting on the they're actually sitting in the driver's seat of data governance. It's so crucial and so important. And 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 again, the chances of them making mistakes, the chances of them being rotating to different jobs, and then you lose all the experience, all the knowledge, and then having someone coming new to the position and he doesn't check things carefully, or he's all of a sudden he's sick and he's away for 2 weeks. And the problem is that compliance is not optional and data
Right.
controls are not optional, and you just lose that. And I think it's mind-blowing today that unlike in cyber, unlike in DevOps, unlike in IT, unlike in marketing, all the data reconnaissance and the data validation, it's all for the most part, it's manual work. In my investor presentation, I have a study from Arizona State University from their accounting department, and they went and engaged. It was done a year ago, I think, in February 23, and they went and engaged. I think it was 120 Fortune 500 companies, and one of the questions was about the level of automation in your controls, and they
Hmm.
listed all kind of controls. Those could be fraud controls, or data controls, or spend management controls, billing controls. What's the level of automation in your controls? And the percentage of companies that responded with 0 to 1, meaning they have no controls automation, was between 45 to 75% of Fortune
Wow.
500 companies.
That's crazy.
We're starting with mid-market companies because we think they're easier to work with at the beginning, and they don't have even the bandwidth that some of the. But it's pretty amazing. Another interesting thing is that, and so I didn't send that to you before the session. We actually learned, the journal published like 4 months ago, a story about Amazon developing exactly the system we're discussing, and
Hmm.
obviously for its own purposes. They are not selling it to. And I know for a fact that Tesla also developed a similar system.
Hmm.
Because for the most part, I think the guidance from Elon Musk is not to buy external system as much as possible. So
Hmm.
they developed their own tech stack, including ERP,
Wow.
and they've developed a similar system to execute control automation. But
Hmm.
for the most part, if you think about the 4,000 or 5,000 mid-market companies that are public or going public today, they're all using manual processes.
Yeah, and that is crazy, and I think there are lots of reasons for that. One is just because of standard budgeting processes and priorities. I think a lot of people view accounting as just some separate world, and that's what the accountants do. I'm focused on business strategy or marketing or sales or whatever else. They don't really think about that. But to your point earlier, it's a big missed opportunity for lots of reasons, one of which is leaving money on the table, not knowing where the money is going, not being able to report, not being able to do good projections and Monte Carlo scenarios. Well, what if we did this or what if we did that? If you don't have a really good handle on the money and where the money is going, you're going to have a hard time doing that. And as I think about what you built, I just it's funny. I've talked about this on other shows recently. These let's say small language models, which are even significantly more complicated than the models you're talking about. You might have thousands or tens of thousands of parameters, for example, as opposed to millions.
Correct.
But what's interesting is that number one, they're learning things that are blowing people's minds. Like when you see, you have to, of course, train it and use it properly and do all these things. But you're starting to identify really interesting patterns. And when I think about it, it's really not all that complicated when it's if you're in manufacturing, you have X number of parts to come in, you have work done to build stuff, you have finished products to go out the other door, and lots of expenses tied to all those things. Well, those are patterns. There are patterns that are already there. And if you can just identify the patterns that are already there, then you can start noticing what's different. Like, well, why is this different? Why did this? And there are very rudimentary controls like over $10,000, you must get sign off from somebody else. Like that's a very rudimentary control, but you can have much finer grained controls. And I think the future is going to be much better in terms of being able to see what's happening. And that's going to be great for everyone. You mentioned how manual and tedious the work is. I mean, your eyes will glaze over as you're just looking at spreadsheets all day trying to line things up. That's what machine learning algorithms were made for, to just scan across these vast systems and point out the anomalies to you. So I think you're really onto something. And I'll just kind of tease for our next segment here is coming up in about 45 seconds, but I think you're really onto something because you're giving visibility into where the money is really going and what's normal and what's abnormal. And because you do this in real time, you can help find things. There's lots and lots of fraud out there. I mean, I'm hoping that you find a way to get into the Department of Government Efficiency that's just been launched here in the United States because there's a lot of money. And I actually had something to do 20 years ago almost with evangelizing transparency in federal spending. And it was as a result of Katrina, because I remember Katrina happened, and I'll pick this up out of the break and tell you the little story. I think you're going to get a real kick out of this, but there is tremendous value to be had here, and it's been a giant dark space for a long, long time that no one wanted to look at. But I think you're going to start seeing a lot of people look at it and pay attention and learn a tremendous amount and save a tremendous amount of money. We'll be right back. All right, folks, back here on Inside Analysis, your host, Eric Kavanagh, with Ahikam Kaufman of SafeBooks AI. And Ahikam, I think you're going to get a kick out of this story. 22 years ago or so, I was driving back and forth between Austin and New Orleans, and I hopped online to check my account balance because I don't balance my checkbook. I wanted to make sure I had some money in the bank. And all of a sudden, I noticed that the check number was underlined. I'm like, underlined? That's usually a hyperlink. So I clicked on it and what did I get but a scanned version of my check? I was like, huh, hallelujah. Look at this. And it was a small bank, American Bank in Austin, Texas. So it wasn't one of the big banks, but I was like, that is fantastic. This is 20 years ago. I'm like, click on it. I can see the check. I'm like, oh, yes. This is like a hero's dream for someone like me because I don't keep good track of things. And so when it's tracked externally by the bank, that's good news. I can look at this thing. I thought to myself, huh, that's very interesting. So why can't we see that for government spending? Was the thought that I had. It's like, why can't we see every check hyperlinked to its purchase order, hyperlinked to the contract, hyperlinked to the bill that authorized it. All that stuff theoretically could be woven together, and then we would have real transparency into where our tax dollars go. Well, then 2005 rolls around. I got a job up in Seattle working for the Data Warehousing Institute. So we moved to Seattle, and Katrina comes in, floods southern Louisiana. And I remember the two senators, Vitter and Landrieu, asked for a quarter of a, what was it? $250 billion or something, a quarter of $1 trillion is what they wanted to rebuild southern Louisiana. And I thought, look, I love New Orleans, I love Louisiana. These politicians are masters at making money disappear. And so I used that story and I wrote an article citing Sarbanes-Oxley saying, hey, if the corporate world has to keep track of their controls and their finances and report on how they got the numbers, why doesn't the government have to do that? After all, it's our tax money. And what I explained was the technology is there. There's no technological barrier. And this is, again, 19 years ago
Yeah.
or so to pull this off. So I went on this big PR campaign. Almost nobody paid attention, but a couple people did. And one guy, Mark Tapscott from the Heritage Foundation, he paid attention. He's like, why did you send this to me? And I explained it. He goes, I've been talking about this my whole life. And so he actually used my concept of citizen auditors to lobby the House and the Senate. And lo and behold, the House passed a bill, the Senate passed a bill, and then George Bush signed the Federal Funding Accountability and Transparency Act of 2006. And I almost fell off my chair. I was like, oh my goodness, they did it. And it took a
Wow.
couple more years for the data to start coming out. But then I was looking through the data myself, and I found in the year 2000, there was a line item for Oracle Siebel Analytics license upgrade and support, and it was for over $1 billion. And I was like, hold on a second. Like an upgrade for Siebel Analytics and support for over $1 billion. You could have just bought Sugar CRM for half that much money back in 2000. I'm thinking, this is bonkers crazy. And what you're talking about with your technology with SafeBooks AI is really the ability to put this very powerful lens over massive amounts of financial data and automatically detect strange things, very strange things, somewhat strange things, prioritize that. I mean, to me, that's what could bring this whole reality of transparency and federal spending to pass. Like we could actually see where everything goes. And when it goes properly, that's great. But when it doesn't, that's not so great. Right. So what do you think about all that?
Well, first of all, I'll tell you a few things. First of all, sounds like you're an American hero. I don't know if you won the Purple Heart, but
That's
it's
funny.
amazing. I would tell you this, by the way, as a separate note. There is this whole world of city governments. I think in the United States, you have
Right.
about 45 or maybe 4,000 city governments. They suffer from exactly the same issues. We
Right.
know they have a little bit of different systems, and I was talking to my team, and maybe that's a market we wouldn't want to block and tackle later. But they suffer from what we call material weaknesses, exactly the same way, and it's all over the place. If you can Google material weakness in city governments,
Yeah.
and I have like Google alerts on that almost every week. You see
Wow.
issues, and they have to report. They are regulated, so they're
Right.
like just a public company, and of course they deal with a lot of money. Um, I think you bring up a very good point, and we discussed it during the break on the why now. I think the why now is like a lot of technologies are becoming more usable for companies like us to use and execute against. So I'd
That's
like to
right.
think that now, unlike a decade ago or 5 years ago, the ability to use AI and to be able to process millions of transactions, and we do it in a complex way because when we generate that graph database and we link between transaction, then even if you take like a million transactions from each system, it becomes like it multiply by a few x's. So it's not like five systems of 1 million transaction each. Because we interlink them, we create a much larger database to process. But today's technology allows us to process it in almost near real time and using, again, AI. So I'd like to think that technology now allows you to do the things you've dreamed about 20 years ago in a reasonable manner, in a affordable manner for every mid-market company.
Hmm. I think that's fascinating, and I'm very encouraged to hear that you have a graph underneath that makes a lot of sense because First of all, graphs are excellent at revealing relationships. For
Correct.
example, this client is related with this salesperson
Correct.
and these products and things of that nature, and that's very good for doing an analysis of patterns and especially of very complex patterns, right? I think that's one of the challenges is that, manually trying to track down all the relationships between this person and customers and products and regions, that's very, very difficult, but it's not difficult for a graph, right? Just throw a query
It's
at
not
it and it'll
difficult.
show
And the
you.
other thing, the graph can do, it can immediately identify the anomalies, because if it follows a certain pattern, all of a sudden you see a transaction that is not linked to another transaction, then by itself it's an anomaly. It's
Right.
important to say that, we are also executing controls the company has. So some of the controls are built into your policies, but our ability is to augment that by searching the data for things that you're not necessarily looking for, but they're an anomaly because an API failure caused that transaction from the CRM not to be billed to the customer,
Right.
or all of a sudden the currency has changed. We've seen that, all kind of things. It's all plumbing, and things can happen without plumbing.
Yeah, well, right, and we're in a very, very interdependent world these days with all those systems, and
Correct.
that's kind of the hint I gave earlier about observability. This API went down, okay, that's why something happened. It used to be, I don't know what happened. Like, let's see if we can figure it out. And usually you just give up. If it's not too much money, you just forget about it and move on. Well, now you can get that deeper analysis into what was an impact analysis too, right? That's the other thing is like, oh, this happened, and then all these other things happened. Why is that? And you talk about financial controls. I mean, look what happened to Silicon Valley Bank. I mean, that was also some very foolish management, I would
Totally.
have to say. But, from my perspective, and this is very personal because most of the money I've made over the last 20 years, I'll bet at some point went through Silicon Valley Bank. And what did they do? They were invested in long-term treasuries at like 1% or something, which is fine when interest rates are very, very low. But when they jack up very quickly, and I could talk to you all day about that, that's a real problem. And so they jacked up the interest rates, the Fed did, and these guys did not rebalance their portfolio. And that's something, I mean, this is maybe a bit outside of where you typically play, but I have to think that you would be able to provide some good analysis in that environment, right? We got 2 minutes for this segment. Go ahead.
Eric, I think you bring up another good point, which is the governance. Take Silicon Valley Bank for an example, and again, we are not today. We are solving much more fundamental things than what happened there. But one thing to keep in mind is think about the board and the audit committee.
Mm,
Finance, unlike any other organization, you don't have a cyber committee in the board. You don't have a DevOps committee. You have an audit committee which work directly with the finance team on the governance piece. And I'd like to think that the audit committee members today, they have to be more mindful about not only whether the company meets its goals and how the numbers looks like, but actually what makes you think you can trust your numbers.
yeah.
And that brings up the point, because in Silicon Valley Bank, I think what happened was also the governance piece was lacking, was deficient. And I think in companies, audit audit committee members have to be more minded and more maybe ask more questions, be more questionable, be more
Cynical.
cynical, or be minded, and just ask tough questions
Right.
about not only what's the reason for the numbers, but how do you monitor the number? Yeah, go ahead.
Yeah. No, that's an excellent point. We'll pick this up in the podcast bonus segment, folks. Stand by. You are listening to DM Radio. All right, folks, back here on Inside Analysis, a fantastic conversation with Ahikam Kaufman. He's the founder of SafeBooks AI. And we were just talking in the break about compliance and regulations and audit trails and things of this nature. And, the job of an auditor is very complicated. It's very difficult to go into some other company and look at their systems and understand what the reporting is. I mean, you can look at the end report, but what went into that? Like, what's the logic that goes into all these things? And I'm guessing that when companies use SafeBooks AI, they have a very serious leg up, not just in maintaining their finances correctly, but in being able to weather an audit, right? Because you've got all the data there and you can show your controls. That's what the auditors want. They want to know, what are the control points, who's in charge of what happened here, and what are you doing about it, right?
Let me comment on that. And I actually, you bring up a great point, which I failed to brief you before our conversation. So, part of Sarbanes-Oxley Act that was enacted about 20 years ago, they created a new government agency called the PCAOB. I don't know if you heard about that or not.
No.
The PCAOB is a government body which his job is to regulate the audit firms. Okay. It's governed by the SEC. It's part of the SEC. The SEC is actually kind of its board, sits on its board.
Right.
And the PCAOB determined, so every year what they do is they audit all the audit firms that audit public companies traded in the United States, whether that audit firm is in New York or whether it's in London. So every audit firms that they physically audit them, they physically go to their offices around the world. And if you know I think it's very similar in the healthcare world for the Joint Commission. So they're responsible to determine the quality of the audit and regulate the auditors. So they check the 2022 and 2023 audits. So they actually, what they do, they sample audit files and they check the quality of the audit. Can you guess the level of deficiency or so in 2023, one of every two audit files that was inspected was determined as a deficient audit. One every two, almost 50%. You can Google PCAOB and 2023 audit quality. And as a result, 3 months ago, the SEC has approved new regulations or new standards for the audit firms that are, again, regulated by the PCAOB, or they have to adhere to new and better audit standards and audit evidence, including at the data level. So the entire public world is facing a new audit standard, which was not is not like fully detailed yet. And I think they're going to start in 2025. But they've done another thing, which is pretty unique. As you probably know, there are two levels of SOX standards. It's called 404A and 404B. And under the President Obama administration, there was kind of a leeway or a relief for new companies going public under the Jobs Act. So during the first few years when you're a public company, when you go public, you don't have to adhere to the higher standard of Sarbanes-Oxley. Now, what they decided to do under the new regulations, which were only published like 3 months ago, effective probably 2025, is that it's going to be consistent for also the mid-market, as I think they call it the ESG, EGC, emerging growth companies. So new as well as veteran public companies would have to adhere to the same new and stronger audit standards, which will include, I think, a much higher governance at the data level. So and to your point before, the main issue is that if you have a complex business that has multiple offerings and multiple systems, the auditor himself, he's not capable of being able to check everything, and that's why they were not doing a good enough job, because they're very much dependent on the customer's ability, on the client's ability, the company ability to be able to visualize the data and the audit trails, which obviously today is not fully available because you don't have the systems. So I'd like to think with solutions or platform like SafeBooks the ability to share with your auditor, of course, with yourself and with your auditor, the full audit trail of a complex business process across all the system, covering 100% of the data, will be second to none. But otherwise, companies would have to develop, whether they're using SafeBox or anything else, would have to develop a much better way to be able to substantiate and demonstrate the audit trail across all the data because of that new regulations. You can see even, and I'm not a political expert, but you have a few US senators like Elizabeth Warren. If you'll Google Elizabeth Warren letter to the PCAOB, I think some of the people who are close to that in the House, it's staggering to see the results that the PCAOB was reporting on, where almost every second company's audit is deficient.
Hmm.
And how do you develop, the United States has the most developed, the most sophisticated financial markets in the world, but you have to maintain the integrity of that. And how do you do that when every second audit is failing?
Yeah, you don't. I
So
think that's
I
the
don't
bottom
think
line. Yeah.
people are aware of that. You can
Wow.
Google that, but it's really even the politician, because I think you have to maintain the integrity of your financial markets.
Yeah, no, that's exactly right. That is the foundation upon which all the markets are built, and you need transparency into all that stuff. And it's all changing very, very quickly, to your point, because AI compute power is now available, and it's available not just to the big guys, but to small and mid-sized companies to build technologies with it, to use it for technologies. Very, very cool stuff. Well, look, these gentlemen up online, Ahikam Kaufman is SafeBooks AI. I think they're going to help us get much more clear view into financial data. And that's what it's all about in business, folks. We'll talk to you next time. You've been listening to Inside Analysis.